good evening, everybody. Thanks for joining. I'm Lee Seiler, also known as the Stock Doctor, and today is Wednesday, Hump Day, and this is the Hump Day Market Update, and it's April 22nd. Thanks for joining again. We have a lot to go over. All right, you know what? Let me move my camera's let me fix that a little bit. All right, okay. Before we go into the oil markets, because there are a lot of questions about that and the way the future's traded. You know, I get questions all the time. And by the way, if you have questions, please, you see the bottom ticker, you can call the office, or you can email Nikki at stockdr.com. We have staff here, Jared and Nikki, here helping out tonight and doing a great job as usual. So, okay. I get a lot of questions. And, you know, I had a gentleman call me a few days ago during the day, and he was interested in buying oil. And I get it. I mean, oil's okay. Sanitize. Okay. Now that's that joke of Appliance Direct with the Asian gentleman. Sanitize. Don't know why he's saying that. Anyway, gentleman calls in and he is buying a low-priced, it's below $1 now, low-priced oil stock. He started buying at $4, buying all the way down. And he pretty much put his entire liquidity in it. He calls me and says, well, let me ask you this. What if I could sell it now, wait a few days, and buy it back cheaper because it was tanking? And I said, well, there's all kinds of problems with that theory. A, is it a qualified or non-qualified account? Which means taxable account or IRA. Okay. It was non-qualified, meaning taxable account, but he had some in his IRA he just bought. He put everything in his IRA and his taxable money in it. For him, it was a working class guy. His entire $80,000. It wasn't chump change, right? It was a lot of money. And I said, first of all, you can't, because I'm trying to figure out a way to buy more at some point. So I figure if I buy when it goes lower, I'll buy more shares. A couple of things, folks, and people ask me all the time, why am I doing this? Why do I do this? Why I take time out of my evening from doing all the great activities we're doing these days? They say, you're not doing it for your health. I go, well, actually, technically, I am. All right, I'm not in public, so that's healthy. And no, I am doing it for health. I'm doing it for your health. I'm doing it for your financial health. And that's what we do here. So we manage money. And again, it's interesting because this gentleman, not a client, called me off of last week's show, and we went over and talked about it. I said, listen, first of all, you shouldn't put any more money in. He goes, well, don't you think it's going to go up? I said, it could go up, but you don't know. So why put more money in when first of all, you don't have it? That's number one. And he made the big mistake anyway of asset allocation. He put everything in one. There's no bigger risk in the investing world or in the stock market. I mean, there's bigger risk, but I'm going to be, in generalities, is single stock risk. Owning one stock. One stock is one of the biggest risks you can ever have. I don't care what the stock is. Thank you. Thank you, Publix Liquor Store. I really appreciate what you guys did tonight. Thank you very much. So, single stock risk. And again, the reason I say I don't care what the stock is, and there's been great stocks in the last 10 years. Amazon has been great, and Netflix has been phenomenal, and Apple, and, the FANG stocks, which is an acronym for FANG, although now it's FAANG, which is Facebook, has been a great performer the last 10 years. Amazon, Apple, Netflix, and Google, which is now Alphabet. I will never call it Alphabet. It's Google in my book. But doesn't matter which one you own. Any one of those or any stock, I don't care what it is. It could be the holy grail of stocks. And in my opinion, Apple is the holy grail of stocks. If you have one stock in your portfolio, let's say Apple. Let's say you go out and I'm going to put everything I own, and quite frankly, I wish I would have done this. In hindsight, hindsight's 2020. I'm a great NFL Monday morning quarterback. I'm phenomenal. Okay? I can read defenses incredibly after I've seen them. But if I go out and I put all my money in Apple, which I wish I would have, not saying you should have, okay? But then I'll tell you a story about the Dell Club of Pinellas County. So what if all of a sudden there's a news story saying that holding this to your head causes brain tumors? If you think it can't happen, you're crazy. And we own Apple. I own it privately for myself and my family and clients. It's our biggest position. And we are damn glad we own it because it's been a great performer. It has saved our asses over the years. That's how good it's been. So because we are a fee-based advisor, we work on a fee. So our objective is to make you money based on your objectives, your risk tolerance. So why wouldn't you hold? If I sold Apple today, could I replace it for something better? I don't know. I don't think so. Because every time I thought about selling Apple, over the long term ends up being the wrong time because it just was at all-time highs a month and a half ago. So anyway, my point is single stock risk is a tremendous problem. Do not do it. If you're going to go out and you want to own individual stocks, buy 5, buy 7, buy 9, buy 10. But you don't have to do that anymore. You can own exchange-traded funds and mutual funds. Yes, you're going to get more bang for your buck owning individual stocks, but I just think that unless you can build a portfolio of individual stocks, don't do it. Anyway, you can call the office. You see the ticker down there. I'm not going to waste my time or your time by announcing it. And you can also email Nikki at stockdr.com. So let's talk about the oil markets because I've been doing this a long time. And by the way, I don't ever watch who's on here, but I want to, first of all, oh, you know what? Nikki, can you bring me my commercial, please? It's in the conference room. There's a piece of paper there, my commercial. I want to do my commercial, too. Not my commercial. So, the oil markets. The craziest shit I've ever seen. We saw the May contract, and it expired. Today's Thursday. That was Tuesday. Okay. First of all, you're buying futures. So what that means is you're buying what you think the price is going to be of oil in May. That's what it's supposed to mean. One contract equates to 1,000 barrels of oil. Thank you, Nick. I appreciate it. So one contract equates to 1,000 barrels of oil. Real barrels of oil. 42 gallons per barrel. So on Tuesday, we had the craziest, I'd never seen this in my life. I've never seen any futures go negative. I saw an interview with the chairman of the CME, the Chicago Mercantile Exchange. They trade the commodities there. He says it's happened to natural gas and a few others. It's never happened to oil, and it did. So what's going on here in this country? We're all quarantined. We're sitting at home twiddling our thumbs and doing other things. Well, according to Netflix, everybody's doing Netflix and chilling, but I don't know. So, don't know what Netflix and chill is. We'll see. Maybe I'll figure it out. So, oil prices. There's demand. Yes? No, there's no demand. Nobody's doing anything. I'm not filling up any gas, ever. I mean, my motorcycle, I filled up a couple times in the last 4 weeks. I've been riding that more. It's a great time to be gas efficient, right? Riding a motorcycle now when the gas is like $1.80 a gallon. So anyway, what was happening is oil went negative on Tuesday. The futures contract, it expired on 2 o'clock. What happened? It got down to, now of course we know the price of oil was tanking. Why was it going down? Well, because at 2 o'clock on Tuesday, you own 1,000 barrels of oil for your $37,000 or what, it was negative 37. But for every contract, you own 1,000 barrels. Most every tanker, most every facility is full. There's been no demand on oil and we're still producing it, okay? It would cost more for the sellers of the oil. It would cost them more to shut down their operations and store it Tankers are already packed to the gills. So at 2 o'clock, if you own a futures contract of oil in May, the May contract, this past Tuesday, they have 1,000 barrels of oil sitting in Cushing, Oklahoma with your name on it. You own it. You need to get it the hell out of Cushing, Oklahoma. So oil is going down because certainly there's a glut. Nobody really paid negative for oil, got money back. There are people. Contracts did trade at negative $37 a barrel. Contract, which is $37,000. It did trade there. So what that meant is some smart guy bought a contract and they gave him $37 to get 1,000 barrels of oil. But it was paper trading. All that was just traders. So if you bought oil, you bought the contract, you got $37, you sold it later that day, and you had to pay somebody $8. Make it easy math. $7. So what did you make? You got $37 when you sold it that low, and you sold your contract to somebody at -$7, you made $30. That's what happened. At the end of the day, at 2 o'clock Tuesday, anybody own those contracts, guess what? For each contract, you have 1,000 barrels of oil waiting for your Cushing, Oklahoma. You better do something with it because you don't have much time to get it out of there. That's what happened. So it was just paper trading till the end. And I know people are saying, oh, well, is gas going to go down to 50 cents a gallon? I don't think so. I don't know. I didn't think we'd see $1.60, which I guess is at Sam's or BJ's or whatever. So futures contracts can go negative. You can lose. When you invest in the stock market and you invest in a stock, the most you can lose is 100%. You buy a stock at 50, guess what? It can go to 0. You buy a futures contract, we've seen. Now, I haven't seen it. And I guess when it happened for natural gas, I wasn't paying attention because I've never seen it. But apparently, it's happened. So, that's what happened in oil. So, what do we think of now with oil? Okay. Warren Buffett, known as the world's greatest investor. I mean, he's done great at times, and he hasn't done so well at times. He's owned a lot of stocks that haven't performed over the years, but he's a value guy. He wants to buy businesses at cheap prices. And you know what? In the long run, that works because, as my good friends at First Trust tell me, math works and math wins. So we, in our investment advisory, we manage money over the last week. For many years, but over the last week, I should have put a comma in there. Manage money over the last week. I've been accumulating some energy, and because I've been working out, and I'm all energetic. No, that's not the point. What I'm trying to say is, we have been buying. Now, I haven't been buying individual stocks. I have not, only because I really don't know which one's going to work out, and I don't want single stock risk or double stock risk or triple stock risk in the energy sector because it's been an abomination. So I don't want that. So what I did is I bought a fund that owns 40 energy stocks, and it's done really well. So I'm happy with it, and I'm not going to tell you what it is because I want to make sure. I don't want people to go out and buy it without discussing it with somebody. But I'm just telling you, we have added some energy in the last several days, including today, to clients because I believe, going back to Warren Buffett, and you know what? I took some advice from my wife, and I took some notes. I don't ever use scripts or notes. I really don't because I don't believe in it. I'm better at without it. Okay, I've done teleprompters on the news before. It's just it's not good. Warren Buffett, his big saying is buy when there's blood in the streets. It can't get much bloodier than right now at negative $37. Now, of course, June's different. We're trading $11 a barrel. That's still unbelievably low. Anything I'm buying in this pullback and this correction and this crash, recession, whatever you want to call it. There's certainly a lot of terms for it right now. We are in a recession. We did have a little bit of a crash. I consider a crash like a couple days, but this happened. It happened quick enough to call it a crash, yes. It's certainly a bear market. We've seen that. I believe if you buy something during this time period, you need to plan on owning it for a while, because nobody, and I feel I'm pretty good at feeling where the lows are, and I, so far I'm right on the March 23rd. So far. But nobody can tell you exactly where the low is or where the high is, and you're usually never, gonna pick something up at the lows. Every once in a while I get lucky, pick something up at the very low or sell something very high, and that when you do that, you feel good. I feel like I'm a genius, which I kind of am, but I'm not in that case. I just got lucky, because that's what happens. So that's basically, in a nutshell, what's going on with oil. Yes, there's some funds out there you maybe could accumulate. If you hold it for a year, I think that you'll be significantly better off, and that's what I'm looking at. So I'm going to do a commercial, because I love these people. I don't throw that term around very easily, by the way, but these people are great people. They're great to me personally. They're great to friends. So I want to talk about Fuel Barbecue. Fuel Barbecue in Sanford. A lot of you people watching the video tonight they're from the Sanford area. If you want real, old school, low and slow smoked brisket, which is my favorite. I actually like the burnt ends. Pulled pork, ribs, and chicken. Do yourself a favor and check out Fuel Barbecue at the corner of Park and 2nd in downtown Sanford. And by the way, they do have, there's outdoor seating. I don't know if you can eat there outdoors, but there is outdoor seating. All right. But they only have the most high quality barbecue. They cook things for a long time. I don't know what the terminology is, but all I know is it's fantastic. And I go there. I've gone there several times since all this BS is going on, and I've picked up food. Now, my favorite side is the smoked mac and cheese. Check that out. But I like the burnt ends and the smoked mac and cheese. During the crisis, they're open from noon to 8 p.m. And when all this shit is over with, guess what? They have a kick-ass blues bar. Not necessarily the blues and rock and roll, called The Alley, right next door. So check them out at Fuel Barbecue. And you can look them up at fuelbbq.com, fuelbbq.com. Okay, so let's move on. And I want to show you a couple of things, all right? I always want to show some charts if I can find them. All right, let's take a look at a couple of things. I just want to show you what's going on with, here we go. Okay, first of all, the economy. As we know, it's an abomination right now, and let's take a look at the most recent CNBC update as far as GDP, gross domestic product. Estimates, see, these are from economists, and it is freaking startling. Q1, keep in mind, 2/3 of Q1 were good. The month of March was a disaster. Q1 is going to be down 5.7%. These are estimates. They're probably median averages of economists, okay? Q2, look at that number. Holy crap. Down 34%. That's the gross domestic product. We are producing nothing for the most part. I mean, yes, we're producing masks and ventilators, but really, business has stopped. Now, they expect Q3 to be up 15%. I totally disagree with this. I don't think anywhere near that. And I'll be very surprised if Q3 is positive at all. So I only because, yes, I know that the state governments are trying to get back to work. More specifically, Georgia, get back to work next week, I guess, month of May. And I have to tell you, folks, I'm kind of torn here because in the history of our economy and the history of this country, we've had several of these, and we've never shut down the government. We're gonna, again, Monday morning quarterback. I don't know. I'm just gonna throw it out there. Was it maybe would have had similar results if we at least kept restaurants open? and said, okay, you have to space people out like they were doing at first, every other table, that kind of thing. Keep your airlines, sorry, we're booked, we're half full. Every other seat, I don't know. Look, I'm not a scientist, I'm not an epidemiologist. All I know is that people are hurting, and it's not our government's fault. They tried to protect us. It's the wet markets in China or a lab in Wuhan. That's what it is. I'm just telling you right now. I listened to Howard Stern in the morning. You've got to close down the wet markets. Paul McCartney said it. Sir Paul McCartney said you need to close down the wet markets. That's where they eat turtles and bats and cat and all that bullshit. So, GDP, third quarter, economists are predicting 15%, roughly. No way. I think fourth quarter we'll have a run here, because I still think that part of that third quarter, there's going to be some uncertainty. This is a great question. What is America 2.0 going to look like? Are people going to want to go to the movies? I saw AMC's been a nightmare, that stock. It's been miserable. Are people going to want to go to the movies? What are they going to want to do? I don't know what they're going to want to do. Are people going to want to go out? Look, everybody knows it. I play in a really I think it's the best band around here, and most people do too. But what is going to happen when they say, okay, you can open up the bars? What's going to happen? I don't know. Are we going to play to a packed house or half packed house? I don't know. But what I do know is that we will get through this. We always do. And even if you still see people driving in their cars by themselves with a mask on, hey, even if you still see that 3 months from now, that's okay. Because that is crazy. Why would you do that? Also, somebody help me out. And by the way, we are taking questions. All right. Somebody help me out. Why is it if you're going to jog or ride your bike in the open air, why do you wear a mask? I'm not being sarcastic, kind of. I'm kind of, asking a question. But speaking of what's going on in the economy, I saw an interview with the mayor of Las Vegas. She's not happy. Okay, because Las Vegas, guess what? We're going to have an NFL team starting this year. The biggest event for them in quite a long time, since Mike Tyson. But, in general, the restaurant industry, 2/3 of their workers gone. Workforce is gone. The restaurant industry lost 30 billion with a B in March. And in April, the expectations lose $50 billion. That's billion. Okay? You need a lot of $1,200 checks to make up billions. So, are we going to do this? I don't know. We'll see what our governor says. I tend to think he's going to play it on the side of caution. I would not think that the theme parks, which is the bread and butter as far as employment here in Central Florida, theme parks are going to, June 1st. I doubt that. Maybe July 1st. Maybe for 4th of July. Be a great celebration if that happened. I hope it does. But when you think about the 40,000 plus people that have died, 55% of the deaths have occurred in New York, New Jersey. Terrible for them. But I get it. I understand why some of the other states like Georgia, South Carolina, they're frustrated. So, crude is very crude, the lowest in many years. If you want, this is where asset allocation comes in. If you can assume risk and volatility of the energy markets, you add a little slither. And the way we manage portfolios, we have a hub, and a spoke approach. So the hub is your core holdings. The stocks that you believe are going to do really, really well, or the mutual funds you believe are going to do extremely well. And then you just kind of spoke out, hey, I want a little bit of energy, little bit of healthcare, because I believe healthcare is going to do extremely well. All right, so let's look at some charts here. Let's take a look at the S&P 500. And I talked for quite a bit that I need that second leg of the W. And here we go. Okay, so the sell-off, March 23rd, which I think is the low. I mean, we are far from March 23rd. The rally, a little pullback. We had a little pullback for the last 2 days, but really, I think now you are a buy on pullback scenario. Although I do still believe we could see somewhere down here, and this is where the support's going to be, right where that low is. And I'll tell you right now where that is on the S&P 500. I know you'd rather hear it on the Dow, but hold on. That low, 24.55 on the S&P, and we're at 27.99. So I think we could pull back here. I'd like to see that. I know those of you that are along the market, my clients, don't want to see that, but I'm not worried because you got to think long term. So let's look at the Dow. The Dow's going to look very similar on the chart, but the numbers are going to be a little bit different. So there we go, March 23rd, and we pulled back. We're at 23,475. I do believe we could pull back to that right there, which is, call it 21,000. I think we could see that. We could see another 7%, because I don't think it's over yet. Earnings are coming out, and that's a big thing now. Earnings are coming out. You had Netflix come out. The stock was down today. Netflix has been a great performer. Let me just look at some couple things here. I'll show you. Netflix is extended, though. Netflix added 16 million. Bear with me. I'm looking here. Netflix added 16 million users during this. That is a stay-at-home stock all the way. Just like Amazon's a stay-at-home stock all the way. They're going to do okay. Netflix has a lot of competition. So, I do not own Netflix. I have owned it in the past. We've made money in it several times. I don't own it now because I thought they're going to have some problems with Disney Plus. This was all before all this stuff, and I just didn't feel like chasing it. But Netflix, I'll show you a chart on Netflix. You'll see that the stock is ahead of itself a little bit. Okay, it's down 2 days in a row. Pre-earnings came out today. They did okay. Earnings were fine. They added users. I think their guidance is a little bit soft, and that's why the stock was down $12 today. But it is a $400-something stock. But it ran from March 23rd low down from 290 up to 440, and now it's pulling back a little bit. So it's extended, and it could pull back at least to that blue line. That is the 15-day moving average. I could see it back to the 50-day moving average. Okay. Let's move on. Let's take a look at the other favorite up there, Apple. Apple got, check this out. Apple got a flat-out downgrade. A downgrade to a sell. It was Goldman Sachs. And I have to tell you, I'm okay with it. At least they showed the cunyance to make a call. And don't say, hey, we're going to start coverage with a hold rating. Come on, show some cunyance. Buy or sell on this one. It's not a hold. It's going to go up or down. We know this, all right? Now, when you look at a chart in Apple, it had the big run up, the sell-off. It got above the, March 23rd, got above it. Now, it got above the 50-day. The red line's a 50-day moving average, got above it, and now it's just riding it. So it's gone down since the Goldman Sachs call, which is natural. You would see that because Goldman Sachs is a big firm. They got some firepower. But I wouldn't sell it. I think it's a good performer. I think it's going to continue to be a good performer because I think that even though that we're going through, all you guys out there that need a new phone, that have the iPhone 5 or 6 or 7, and quite frankly, I'm not surprised. I wouldn't be surprised if Apple puts a bug in your phone after 2 years and says, oh, my phone's acting up. Because it always seems about 2 years when the new phone comes out, you have a problem. Look, I don't care. They're a great company. I thank Apple because I've made a lot of money on Apple over the years, and I really appreciate it. So I think there's still going to be a pent-up demand for Apple, and I would still hold it. Would I buy it here? Probably not. I'd buy a little cheaper. I'd pull back. So if it got back to the 200-day moving average, a white line, if it got down to 250, I'd buy it. Okay, we have Bill from Longwood wants to talk about Occidental Petroleum. Oxy. The Oxy business is doing pretty good right now. Okay. I'm sorry, not Occidental Petroleum. Everything else is because people are having some problems. Okay, this is your typical oil stock, folks. It's been absolutely awful. Okay. It rode the 50-day, the red line's a 50-day moving average, and it got below it. And then remember we talked about, and we talk about this frequently, where there's a swap there, where support also, when you have a stock that's hitting a level, keeps bouncing back up, that's support. But when it breaks it, now it can't get above it, that's resistance. That's what we're seeing here on Oxy. So the 50-day moving average is now resistance. It can't get above it. You see? Let me show you over here. Tries to get above it, it can't. Tries to get above it, it can't. Tries, it can't. It did for a while, but then, guess what? Another resistance. That's the 200-day moving average. These are all resistance levels at this point. It couldn't. It gets back down. And then, because the 200-day moving average, which is a longer-term trend of the stock, is trending lower, this is what happens. And all of a sudden, finally, it just breaks. Okay? It breaks. At this point, the stock was at $40. Now we're at 13. So, I personally, I had one client that called and said wanted to buy it. I said, it's your call. And but they bought it cheap. I mean, they're okay. The dividend right now, and I'm going to talk about dividends because I'm getting ready to wrap things up here. The dividend is 24% on Occidental Petroleum. 24%. This just in. That dividend's being cut, and it will be cut. I don't know if they've cut it yet, but it gets cut upon earnings. That's what normally happens, and we're starting to see that right now. A lot of dividends are getting cut. I'm trying to look up, see when Oxy, bear with me, but that's when you'll start seeing dividends getting cut. And it says Oxy is due to report in 13 days. So I would say you'll see it. They'll announce it. So talk about dividends, and I like dividends. I love when companies pay me. You know, back in the day when the New York Stock Exchange first opened, you bought a stock for dividends, mostly railroads. The Dow Jones was railroads and GE. So basically, you bought a stock, and they paid you dividends, meaning a cash return on your investment. So if the stock went up 10%, you made 2% in dividends. That was great. You made 12% total return. That's great. These companies, I made a list of them, have already cut their dividends. Estee Lauder, Darden, Marriott, Boeing, Ford, Delta, Bloomin'. By the way, Bloomin' Onion, yeah. With Outback Steakhouse. It's Outback, Carrabba's, Bonefish. They cut their dividend. Macy's may be cutting their stores. They may be going out of business. And Las Vegas Sands, among others. So, I just think that what was going on here, you can be buying and you can own. I think that the worst is over. My opinion. All right? I believe, and the reason I have that opinion is because I'm not looking a week from now. I want to urge you, if you are a stock trader, I mean, you want to get in, get out, more power to you. That's not what I want to do for clients' money. I want to put them in a place where I believe that a year, 2, 3, 5 from now or more, they're going to be doing pretty well. And I really firmly believe that if we own and buy some things down here, some really good businesses, I still think the banks, buying them at 45, 50% of book value, you're buying a piece of business. This is what Warren Buffett said. You buy these businesses, own them cheap, and you'll do well over time. And that's the key, is you got to do well over time. I really think that a lot of people are too short term, and you really can't be like that. All right, so earnings, Coca-Cola came out. They lowered guidance, not great. Delta's going to come out. You know it's going to be an abomination. Intel comes out tomorrow. Netflix came out. We'll have a lot of earnings coming up over the next week. And listen, I really appreciate you guys joining me tonight. Please share this video. It's good information. All right. If you need to talk to us, you can call the office, talk to myself, talk to Nikki, or email Nikki at StockDR. Any questions, or if we can help you with your portfolios, your 401ks, do a portfolio analysis, we'll do that for free. All right. We want to help you. Want to make sure that you guys are in the right place at the right time as best as we can. Hey, I'm Lee Seiler, also known as the Stock Doctor. By the way, we do have a podcast now. Just started it. That's one more thing I have to do. I have nothing else to do now. Seriously, I have nothing else to do. So, podcast. We have one up on Spotify. Look under the Stock Doctor's Prescription. We will put another one up on Friday, and it's going to be coming up, I guess, on Fridays. We may switch it to Mondays. I don't know, but we're doing them. And it's myself with the rest of my staff. We got the two millennials, and we got this Justin Kenny is in the house. So it's actually really entertaining and good information. And whatever we don't touch on tonight, we'll touch on for Friday. So check it out, the Stock Doctor's Prescription on Spotify. We have a lot of resources. Our website, stockdr.com. Listen, we don't have to have a face-to-face meeting. If you want to talk about your portfolios, we can do it via Zoom, which, yes, I've been doing Zoom lately. Yes. I'm a technology moron. But I am the Stock Doctor. I will see you next time. Everybody have a great evening. Good night.